What an amazing day in the stock market today. At one point, the Nasdaq, it opened up, was down 1.4%. And as we're recording, as the market closes, I believe it's up 2.2% and change. Guys, this is the heat map a few minutes before closing. I believe Nvidia is actually up about 8% now, a little over 8%. Now, here's what's interesting. If you've seen past videos on this channel with the heat map, markets might be down, but there's a lot of green over here and a lot of red over here. And I say, hey guys, the big companies lead the up, the big companies lead the down. What do you notice now? A lot of red over here, but the big ones took a surge today. Every single stock in the semiconductor index was up today. Look at this, all green. Poor Texas Instruments, the only one that was only up 1% today. Losers. Nvidia, gosh, guys, incredible. What happened throughout the day? Well, the Fed. The CPI came out. People were saying, oh, this stinks. The Fed's only going to raise rates because inflation fell at 2.5%. And we did a video this morning about it. Core CPI is still at 3.2%, higher than they like. And people are upset by that. Guys, if the Fed said they want 2% core CPI, why are they cutting rates? That's the question I have to ask you. Are they worried about the economy? They think we're slipping in a recession. I don't know. But when it goes back to stocks, my goal here on this channel, and the reason I want you to subscribe to this channel, I want you to think that I enjoy hearing about the economy. I enjoy hearing about markets, but it's not going to affect my decision to buy because I buy companies based on the long run. Guys, it's one of my favorite things to show. These are a few of the terrible things that have happened since 1950. And the S&P, by the way, this isn't a real S&P chart. This is a logarithmic chart, which means every time it goes up, it's actually by a higher and higher amount. So this growth is actually like that. But look at all these things that happened. Nixon resigned, 18% mortgage rates, Vietnam War, Nixon, JFK killed, human missile crisis. Does anybody remember a thing? Anniversary today, 9/11, September 11th, right here. September 11th, I was a junior at the University of Michigan. I woke up, turned the TV on, saw a plane hit the tower. I said, oh, surprised it took that long because I thought skyscrapers would hit at some point. Went and took a shower, came back out, and the second plane had hit. That's my story. That's where I was. I was on, if you go to the University of Michigan, I was at 1114 White Street. That's the house I lived in. What if one of the people who lives there watches our channel? If you're a Michigan student right now, and you know the person who lives at 1114 White Street, please show them this video. But anyhow, guys, things are going to happen. It's going to be a lot of bad things that happen. If you buy good companies at good prices and the stocks fall, but the businesses are essentially the same, doesn't mean profits going to be higher or low. Profits will go down in a lot of companies, even with recession. But if they're still the same kind of company, you want to buy them. That's what we're trying to do here. This is an insane day. Let's go see how Nvidia finished the day. Because Nvidia, you guys, is the poster child of this economy. 8.03% today. That's a big jump. Guys, this company went up $250 billion today. Not quite that much. 8% on, almost that. $240 billion today, 230. That's a lot of freaking money. It's been a very volatile stock. Still off its all-time high of 140. Now, what does this volatility mean? I don't know. But this is a lot to handle. Like, I look at this going, is the market trying to find the direction it's going to go? To me, if that's the case, it's going to be very susceptible to any sort of news. Now, you remember valuations. Valuations, we did a video on Monday about valuation in the market. We're over 100% overvalued by two of the most reliable indicators in history, the stock market GDP ratio and the 10-year cyclically adjusted PE ratio. Does that mean you should sell everything? Absolutely not. What it means is prepare for volatility. If you're close to retirement, I'm not your financial planner, but you have to ask yourself, is it more important for you to gain 10% or maybe have to postpone retirement a little bit? Listen, I talk about this all the time. I'm never going to retire. I use retirement calculator several times a week just to remind me of, Paul, you have enough. You don't need to take risks that you don't want. You can be pickier on deals. Go to the deals that will really do a good job for you because you're okay if you make 5 or 6% the rest of your life. That's the kind of mentality I have. Doesn't mean you're going to have that, but you can still use this for the exact same thing. Making sure you're on your path to retirement. That way you don't force things to happen. Don't risk what you have to get what you don't need. That was the biggest mistake I made when I shorted Nvidia and the tech sector after COVID. That was the biggest mistake I made. was doing that. That was like, Paul, you risked what you had to get what you didn't need. Now, I didn't risk all of it, but the point is, even a 5 or 10% blow when the market goes up 10%, that sucks for you. Okay. Now I own 22 or 23 companies, 18 of which I talk about on our channel, on our main channel, but I think they're good companies. And guess what? Today I did a video on the main channel. We haven't posted it yet, but we went through the 18 companies and only 3 of them did I know what the stock price was at that given time. And the only reason I knew that was because I accidentally saw it somewhere on Twitter, basically. That's what I want you to understand. And by the way, I'm active on Twitter. I'm about ready to hit 5,000 tweets in a little over 2.5 years. Follow me at EMPaulG. If you're a member of our community, write me a message. Tell me your username in our community and your email address, and I will follow you back. I'm going to reserve as much following back to only community members. But guys, I don't even worry about where stocks are at any given time. In fact, today we're doing American Express. I'm like, okay, American Express, I bought it at 150 down to 140, and I thought it was at 180 right now. And Tim goes in the background and goes, Paul, it's at 252. I had no clue it was at 252. Let's see if it's at 252. It probably went higher since then because I recorded videos since then. $254. I had no clue. And by the way, you might be like, wow, Paul, you did great. I don't care. I want it cheaper. I wanted to go lower so I could buy more shares. I don't have a full position in American Express yet. I only knew 3 of this 18 company stock prices. Now, some people would say, oh, you got to be on top of that. No, I don't. What I have to do is buy good companies at good prices. If the price falls, I buy more. If the price goes up and it's still underneath my buy price, I buy more. If it goes up and it's above my buy price, I just hold on to it. I'm no longer going to the game. The biggest mistake I made ever, people, selling Microsoft at $60 a share. Because everybody was telling me how wrong I was when I was buying it from between 17 and 21. It goes to 60. I said, hey, it's overpriced. Let me sell it. And it proceeded on to there. And now it's at $400 and some a share. All because I thought it was overpriced at 60. Was I wrong? I think I was wrong at overpriced at 60 anyhow. Forget about the fact that the stock went up a ton. I think it was worth about 70, 75. I just didn't value it for the growth and the high return on invested capital from before. Now, if a lot of that sounded like you, which it probably does, that you might sell too soon, you might get worried. I used to get worried when I heard about news, what's going on in the economy, what are rates going to do? I don't care about any of that anymore. And I sleep wonderfully at night. I love doing that because for me, the process I've found that works very well for me. And my process can help you find the right process for you. You're not going to mimic me. You should not mimic me. You should not own any stocks that I own. Like American Express, you should not own that just because I do, because Warren Buffett does. You got to find the right process for you. And I encourage you to do that by subscribing to this channel, watching our videos. We do 4 or 5 videos per week. We recap markets. We do earnings releases, things like that. But today was a wonderful day in the market to show immense volatility. The Nasdaq changed by 3.4% from bottom to top today. Don't tell me efficient markets are. The Nasdaq changed 3.4% swing today. Actually, from 0.3% down to 1.4 is 1.7%. Back up to plus 2 is another 3.5. So actually, it was 5% of total swings today. Anybody who tells me markets are rational after hearing that is an absolute moron and should be punched in the face and should be sentenced to financial manslaughter. That is absolutely insane. What I like to do is sit there and guess what? There'll always be a better time to buy stocks at some point. And right now, I think we're just too much in the greed category. From July 10th, that was the peak of the Nasdaq so far. We don't know where it's going. Anybody that says otherwise has no clue. But we've had most days be very different than this. Look at this. And guys, if the markets fall hard, these are going to be the ones that fall the hardest. I sold puts on Google. It's going to fall. And the funny part is I'll probably buy Google at marginally lower than today, and it'll probably fall even further because as the market does fall, the biggest ones and the most overvalued will fall the hardest. Thank you very much for your time. Please subscribe to the channel.